right, welcome back and welcome to RSI. Okay, so I figured I'd come and just talk about this real quick. I've been wanting to talk about it for a long time and do just like a quick training on it. So I'm just going to go over just some details real quick before we head over to the price charts so I can show you it in live action to kind of, help you visualize everything and actually bring it to real life. But there's just a couple of important things that stick out in terms of the terminology, the definitions, and actually what it is and what it does. Because newer traders and novice traders and things like that, they simply just like to refer to it as overbought and oversold. And there's a little bit more going on than just overbought and oversold. So it is a momentum indicator, as you see here, using technical analysis. This type of filter is what you call it. It's an indicator. I like to call it a filter because it's one of the filters that I will go to and use when I'm building out my combined technical score, validating the probability of the trade entering long or short. Okay, so I do want to know, is it overbought or oversold on RSI? But it's, it's just the meaning, the definition, the things in it are just different from what people actually believe. So the primary purpose is to identify overbought and oversold conditions in the market, of course. But here's another key. So it's a momentum indicator. Okay, it tracks the rate of price changes. How quickly are they changing? Are they starting, or are they continuing to sell at a very high rate? And if you think about it, if you just look toward the bottom and you see it's red and it's oversold, it just pretty much means that there's not a lot of selling going on. It has really, really slowed down almost to a crawl. See what I mean? Now, of course, if there's not a lot of selling going on, right, something must have happened. Price action must have hit a potential point, a zone, a certain structure level, and then they're starting to close their positions and get out the way. So all of these things are allowing it to slow down. And at that point, of course, naturally, buyers are going to come in and try to take the price to the next level, especially if this was trending or in the course of a correction. Okay. So at a certain point, once that is finished correcting, like maybe it could be 38%, 40%, 50%, 60%, or 70%. Once that's done, the buyers have taken their money. They're going to close their positions and get out the way. RSI is going to tell you, okay, they're done. Okay, this thing has slowed down. The momentum has decreased significantly. Okay, so that's what's going to allow that to print, what it's going to print for you. So just real quick, traditionally it's RSI above 70 in an asset is overbought, potentially signaling a price reversal or a pullback, and then sellers are going to come in because 70, they consider that high. I got some things to say about that. That's considered high, and not quite, but I'll just take this at face value for the sake of this video and this training. An RSI below 30, so this is a default 70-30 out of the box RSI settings that most charting platforms come with. So below 30 suggests that it's oversold, not quite, and I'll talk about that a little bit before we get to the price chart. Potentially indicating a price rebound, not quite at 30, and I'll show you what's really happening. A calculation, RSI calculation, involves comparing the average of upward price changes to the average of downward price change. So this is a calculation that's happening typically over 14 periods or the last 14 candles. So I do have something to say about that as well. Okay, while the formulas can be complex, most charting platforms calculate it automatically, so you don't have to worry about anything. You just throw it on there and you let it do its thing, but you can tune it up. You can fine tune it. Let me talk about the other part of it real quick, and that's the divergence, because these two go together. So in my trading system, I like to have that overbought, oversold condition, and I'm going to combine that with the divergence. I'm going to use both of them, pair them together to get a higher combined technical score, or a CTS. Okay, the divergence occurs when the RSI and price action move in opposite directions. Now, many of you have seen me talk about this, where it looks like price action is coming down, but RSI has printed what you would call bullish divergence. So example, if the price action is making new highs, right? The price action is making new highs, but the RSI is making lower highs. This could signal a potential reverse or a bearish reversal, in which it usually does. Bullish divergence, same thing that I was just saying. When the price action appears to be making lower lows, but the RSI is printing higher highs, this could be a sign of a bullish reversal. Something that's not spoken of, and I want to be one to talk about it, is that center line. I don't talk about it often because I'm usually concerned with the overbought and oversold. But if you're doing more trend continuation and you're looking to enter on pullbacks and stuff like that, the 50 is in the center. Okay, the 50 level of the RSI can be used to identify trend. When the RSI is above 50, it can indicate a bullish trend. When it's below 50, it can indicate a bearish trend. Now, let me talk about the adjustments, as I said, or tuning of it. Reduce signals by widening the overbought and oversold zones to 80-20, which is what I do in my system. You'll naturally receive fewer signals because, of course, when I'm doing my CTS, my combined technical score, I only want the best of the best. I don't want to jump up and down every time there's a 70 or 30. You guys understand that? Does that make more sense? I don't want to be jumping up and down every time I think there's a trade. I need it to be locked in. I'm filtering out the bad ones and keeping the good ones, okay? This means you'll only be alerted to potential reversals when the price momentum is exceptionally strong. Regardless of the direction, bullish or bearish, overbought or oversold, I need to increase that for the ones that are exceptional so that I'm not getting faked out, or I'm not coming in too early. So it's basically adding precision to the entry for a trader like me who does a lot of counter trend trading, relying on overbought or oversold conditions and reversals. So I hope you were able to hang around while I read through that, putting that stuff together for you. And I want to use this opportunity to talk about a couple of different indices. Okay. SPY. So we got the RSI stuff out of the way, and for SPY we see a couple of advanced patterns. One cipher pattern that filled on January the 10th, and what an amazing beauty it was. Okay, what an amazing beauty winning bullish cipher it was. Now, if we jump down and look at the RSI, okay, remember we had the oversold condition, and when this price action looked like it was coming down, right? The price chart is printing bearish, but the RSI was printing upwards. Okay, so that hopefully stop the video and take a screenshot, because that's what you are going to look for in terms of divergence. Okay. Let's go ahead and take a look at one that does not have the divergence, okay? And that's what's coming up. That's what's coming to us now. I mean, I could flip this into a complete SPY video with all the information here. So we're waiting for this cipher to finish, which we would hope to have this same type of reaction as the one before, right? So you can see you can see what it's capable of, right? This thing can really kick some butt when this cipher fills and reacts in the positive manner. I'll say that, right? And just for the rules of engagement, as we see, like how is that cipher? You can always go refer to the this is the most powerful pattern in the market video, but just rules of engagement. This is the impulse X to A. This is a 49% valid B leg. It only needs to reach the 382. It needs to be a 382 retracement of X to A to be valid. This is valid at 49%. The C leg up here needs to hit the 127.2, must be a minimum 127.2 extension of X to A. You see it's at 128. It's perfect. And then the D leg completion is a 786 retracement of X to C for the entry, looking for the very things that we just talked about, which are in this example, oversold on RSI and bullish divergence at your entry once the candles close. Perfect. And you can see what cipher is able to do. Again, refer to the cipher pattern video in the Harmonic Trading Academy playlist. Now, the beautiful, wonderful thing is, okay, for people who missed that, kind of like a get rich quick trade. Just kidding. He's building up for another one. Let me just go over the rules of engagement again, and then we'll talk about what's wrong with the RSI, what's different about it, at least for now. So impulse X to A, remember B needs a 382 or 38.2%. We're at 54% on B. That's valid. That's good. You need 127% extension of X to A. You're at 129, almost perfect. And you need a 786 retracement of X to C for the decompletion and entry points to get long. And that did so amazing. If we do that again, it's gonna break out and create some new highs. If it does anywhere near what it did here on this one, on the previous one, if it reacts like that, then you guys can kind of tell what potentially could happen with SPY as he continues to get out of this. If you notice, I have it boxed out too. Hopefully you guys are learning some things about technical analysis, and when you're creating a market, I usually like to take a look at what's happening. If I got sideways movement and consolidation, I'm going to box that out, because a lot of the times when the market is moving sideways like this, that's when you get these harmonic patterns. When the market is consolidating, you can get them in both directions, trending bullish and bearish, different types of patterns. Cipher, Bat, and Gartley are usually found. Cipher, Bat, Gartley, and Butterfly are usually found when the market is consolidating, offering these types of amazing counter trend trading opportunities. Market coming down, you're going to counter up here. So that being said, I almost lost my train of thought, but I did go over the rules of engagement to show that, hey, I would be on alert, somewhere for in this area right here to get long, right? I think all of that makes sense. But in terms of RSI, I would need a couple of things to be present first, okay? So this oversold condition right here, let me just do this. This oversold condition right here, I'm hoping that once the price action is down here, that I don't know where that's going to be or how long it's going to take to drop from 600 to 595. It's only $5. And we could see that as early as market open, or maybe even during pre-market. This cipher might be ready to go. You might see that $5 drop. I'd have to go see what the average true range is and how long it would take to get there on a 1 hour chart. But anyway, what we will be looking for when that happens is for the bullish divergence. Now, we're not going to get it from like we would have wanted it in here. It's not going to happen. It's also not going to happen in here, right? It's just not going to happen. The divergence is just not there. Okay, so the only way that we could get the divergence is for this to close and for RSI to come down here and do something like that. And then maybe we would have the divergence like that. Okay, so then that would say, okay, but that's still not printing higher lows. So it still wouldn't give me enough confidence. So at that point, my combined technical score wouldn't be what I want it to be, even though I have confidence that the cipher pattern will be successful. But it's all going to depend. But I wanted to show an example of when you do have the divergence in this case versus when you might not have it. And then it's up to the trader's discretion to decide if he's going to pass up on that. Okay. I also talked about the settings. Remember, I said I adjust my settings to 80-20, and you can see the 50 in the middle. So the RSI upper band, which would be the overbought, the OB, 80 instead of 70, because I don't want to be jumping around every time. I don't want to be trying to short when it's not even time to short yet, right? I'm going to let Fibonacci and things like that take care of me. I'm going to let completed patterns tell me, direct what's going on, not, just the transactions. No, I actually need certain things to happen. RSI lower band, or what would be oversold at 20. So no more 70-30. And then the other part that you guys have seen me talk about is that period, like tightening up that period. I don't want to be jumping around, because now that 14 is too wide. It's lacking. it's too wide. So there's more things happening inside of there. No, I need to shorten that period. I need to be precise. I needed to tune that and tighten it up. So that helps with that part. I want to go look at one more. So that was SPY. And then if we go look at the Vanguard, kind of like the same thing, more harmonic than people probably realized, right? With a winning Gartley pattern here on this side, then he comes, drops off, pays off tremendously because the market reacts and works harmonically, whether you like it, hate it, understand it, agree with it or not. That's just the way it works, and that's why this stuff is on your screen. And the same thing with the Vanguard index, similar to SPY. Basically, its running mate is doing the same thing, where we got, a valid B leg at 54%, needs 382, and then we got a valid C leg at 127, which is exactly on the dot, setting up for a 786 D leg. So this would be another cipher opportunity should it come down and fill, which would be somewhere in this area, okay, to get long. But in order for that to happen, it's kind of like the same thing. This basically looks exactly like SPY, but we don't have the bullish divergence. So again, we would be looking for price action to come down and stop, and then make a print with the bullish divergence, telling us, I know it looked like we weren't going to stop, but we actually are. I can tell you this, there's going to be a reaction here. I'm not sure how strong it's going to be, and I'm not sure what the market conditions are going to be at that point. But when this cipher fills, there's going to be a reaction here. Vanguard, as you can see, is very harmonic. I could even go to the point of, I could even take it a step further and say that there was a reaction off of a advanced butterfly pattern. We could do that too. So, and a winner. So you could actually have bearish winning Gartley and bearish winning butterfly. We could do that as well. And then come back after all of that madness is done and then flip over into cipher. That'd be pretty amazing. So just showing you, yes, the market does continue to create harmonic patterns over and over and over. And if I kept going, I don't want to flip into that. That's not what this video is for. But if I kept looking around, that would definitely be evident to you. But anyway, hopefully this video, you can refer to this video for more discussion on RSI, more training on RSI. That's pretty much it. It's really not too much to it. It's just really, learning how to incorporate it into your trading system to give you higher probability entry opportunities. That's what you want to use it for. So hope this video provides some value to the community. Anyone that was interested or looking for more of an explanation on RSI, like the channel, subscribe to the channel. I see that most of the people who are watching this content are not subscribed. It's somewhere like 20% are and 80% aren't. So I could use the support as well as I continue to build this content out and build out the Harmonic Trading Academy, which I am looking at it now. It's just a phenomenal playlist with everything you can ask for. So far, it has just about every advanced pattern in it. It's got these RSI things in it. It's got entry techniques and stop losses in it, ATR, you name it. Different types of techniques, 2618 technique. It's got pretty much the works in it, and I'm just building and adding to it every day with just a complete brain dump of everything that I know about technical analysis and the things that I learned from you. I learned them from some very amazing traders that are still active in the markets today. Some of the best. I'm basically a protege of people who are 10 times better than me. All right, so that's why it comes out like that. Anyway, subscribe to the channel if you're not subscribed. Leave a like, leave your comments, and I'll try to get back to them. I'll try to reply to them when I get the notification. Until then, I'll see you on the next video.